Welcome to this Skillick Explains video on a topic I'm asked about quite often, which is how can I quickly weigh up a stock and decide whether it might be any good or not. Now I should stress that as a long-term investor, I'm not a massive fan of doing things too quick and dirty as it were, but nonetheless there are 5 tests that I would regularly apply to decide whether I'm going to roll my sleeves up and do any more work or move on. So what are they? Well, the first one is I'm looking for evidence of growth, and I'm looking for growth cut 3 different ways. I want sales and revenue growth. Sales is the lifeblood of any business. Without that, you're not going to generate profits and you're not going to generate cash flow, more about which in a moment. So I'm looking for a consistent pattern of sales growth. I'm looking to understand what the drivers of that growth are, and I'm looking to test whether I believe management forecasts. And again, I'll come back to that in a moment. Now the next question is, as Sir Alan Sugar put it, it's all very well being able to grow sales, but I can sell £10 notes for £9 any day of the week. I still don't have a business if I do so. So can the business turn sales into profits? So I want to see growth in profits, and I want to see consistency in things like gross profit margins. In other words, I want to be able to believe through analysis of gross profit, for example, that the business can weather any short-term bumps in the road. And the final component of the growth story is cash flow. Cash is king. So having established a pattern of sales growth, having established the ability of the firm to turn that into profits, I then want to see evidence that hard cash can be delivered through proper working capital management and so on. So I'm going to be doing analysis that involves the profit and loss account, the balance sheet and the cash flow statement to build out the full picture. Now test number 1, and this is just a truncated version of the work I would do, is therefore ticked off. Evidence of growth. Next up, management. The people running the business are fundamental. They're going to be delivering the growth I want in the future. So I'd apply at least 3 tests to management. Do they have a track record in this sector? Do they have a track record of being able to deliver on their promises when it comes to dividends, acquisitions, and so on, hitting targets, for example, on a quarterly basis? Is the management team stable? In other words, are there regular vacancies at the top? That's not a good sign. And have I got evidence that this team has been together for some time and can therefore deliver on its promises? And finally, what are they doing in terms of putting their money where their mouths are? Is there evidence of insiders selling? Now, it might be for innocent reasons, like they need to raise capital personally, or am I seeing some evidence of top of the cycle behaviour, if you like? Because if the management team won't commit to the business, why should I? Test number 3, if you like, is around the share price. If I'm going to invest in a company, I want to see some evidence that other people like the look of the shares too. So I want to see evidence of decent trading volumes. Thin trading volumes can make me nervous. So I want to look at turnover in the stock, if you like, over say the last 3 months. And I want to see some stability around the share price itself. If I look at a share price chart and I benchmark it against other indices and other firms, what am I seeing there? Because whilst the past is no guide to the future necessarily, I don't want to see a share price chart that spikes all over the place. Not for me, as they say. Fourth, can I see evidence of a sustainable competitive advantage? Will this business be around in 10 years' time? And what's my evidence for that? How strong is the brand? How easily can competitors come into this space? Are there regulatory barriers, for example? Are there economies of scale that other firms would struggle to achieve, and so on? So lots of ways that I would sit back and look at what Warren Buffett has once called the moat of a business, its ability to sustain its competitive position over time. And my final quick test would be me asking the question, Do I understand the business? Now this draws together some of what I've said previously in this video, but fundamentally, do I understand what drives the business? Do I understand what motivates management to deliver on their promises? Is their remuneration tied to a number, a metric that I believe in too, for example? And ultimately, do I know what will keep this business ahead of its peer group over the medium to long term? Because if this is a business that's simply making a fast buck off one good idea that can quickly be copied, then maybe it's not for me as a long-term investor, and I will leave it to the day traders, and I'm not an example of one, to do their best to time the market, something which personally I think is incredibly difficult. So there you have it in a nutshell. Look for evidence of sustainable growth, look at recent share price activity, understand management and what motivates them and their commitment, look at the size and sustainability of the company's moat, as it's called, and finally, be honest about whether you know how this business makes money now and will continue to do so in the future or not. Now, I've covered a lot of ground just there, so if you'd like to watch videos that go into some of these points in a lot more detail, then do access our extensive library at killick.com/learn. And if you'd like a copy of my introductory guide to how to invest in equities, it's free. Do feel that you can ping me an email, editor@killick.com, and that also goes for any specific queries on the points that I've summarised fairly quickly here.